Ladies and gentlemen, welcome to our first annual general meeting of Arvocap Unit Trust Scheme, held virtually pursuant to Regulation 134 of the Capital Markets Collective Investment Schemes Regulations 2023. Let us all stand for the national anthem and the East African anthem.
Mashariki, tuwezeshe kuishi kwa amani, tutimize na malengo yetu. Jumuiya yetu sote tuilinde, tuajibike, tuimarike. Umoja wetu ni nguzo yetu, idumu jumuiya yetu.
Thank you. My name is Eden Kaberere, representing the fund trustee, who is NCBA Bank Kenya PLC, and I will be chairing today's meeting. I sincerely appreciate all of you who have managed to join us today. I would like to inform all participants that this annual general meeting is being recorded. The recording is conducted in accordance with our data protection policies and is intended solely for record-keeping purposes. By continuing to participate, you are acknowledging and consenting to this recording. If you have any questions or concerns, please feel free to contact the fund manager at clients@arvocap.com. Moving along, let me take this opportunity to introduce the board chairman of the fund manager, who are Arvocap asset managers, to introduce the other board of directors and the management of the fund manager, regulator representative, and the various service providers present. Over to you, Chairman.
Thank you, Chair. Eden Kaberere. Good morning, unit holders. My name is Dr. David Mutonga. I am the chairperson of the board of the fund manager. That's Arvocap Asset Managers. It is my great pleasure to welcome you to the Arvocap Unit Trust Scheme first annual general meeting. Let me take this opportunity to introduce the members of the board. Like I indicated, I'm David Mutonga, an independent director and non-executive director and the board chairman. We have Susan Mukora, an independent non-executive director, who is also the chair of the Audit and Risk Committee. We have Monica Mwaniki, executive director and the chief executive officer. We have Priyanka Shah, executive director and chief operations officer. Then we have Wilson Wariari, executive director and chief investment officer, and Jasper Lubeto, company secretary of the board. I would also like to acknowledge the presence of the following service providers who are on this panel, and to thank them for their dedicated service and commitment to the business. And they will just be showing, raising their hand as I mentioned them. Eden Kaberere, representing the corporate trustee, that's NCBA Bank Kenya PLC, and who is also chairing this meeting. Caston Mukunu, representing the custodian, that's NCBA Bank Kenya PLC. Stephen Nyagaga, representing the Capital Markets Authority, with the regulator Isaac Moriti, representing the external auditor at BDO East Africa. This fund is managed by Arvocap Asset Managers, which is also represented in this meeting by the management team. And now I will invite our CEO, Monica Mwaniki, to introduce the members of the management team. Over to you, CEO.
Thank you, Chair, and good morning, unit holders. My name is Monica Mwaniki. I am the CEO of Arvocap Asset Managers. The fund manager is managed by the following members of management team. I lead the team as a Chief Executive Officer. There is Priyanka Shah, who is Chief Operations Officer. We have Wilson Wariari, Chief Investment Officer. Victoria Kioko, who is Portfolio Manager. John Kamau, Head of Business Development. Erastus Gedaiga, Team Lead Operations. Simar Jutla, Operations Excellence Manager. Catherine Kioko, Client Service Lead. Philip Mwoki, Marketing Lead. Eric Kitavi, Wealth Desk Team Lead. That's Eric there. Swale Sharif, Head of Human Resource. We have Emmanuel Simiu, our Head of Risk and Compliance. Finally, we have Ruth Mwiti, Finance Manager, who is joining us online. Of course, behind these people, there is another huge team. Thank you, and back to you, Chair.
Thank you, Chairman and the CEO, for the introductions. Moving on, at this point, I would like to call upon the Company Secretary, Jasper Lubeto, to confirm the presence of a quorum.
Thank you, Chairman. Dear Board and unit holders, in accordance with Regulation 140, Sub 1 of the Capital Markets Collective Investment Scheme Regulations 2023, the quorum for this meeting is 10% of the total number of unit holders, and the unit holders representing at least 10% of the assets under management per each fund. I confirm that a total number of 3,900 unit holders representing 36.65% of the fund value are participating in the virtual annual general meeting. I confirm that the meeting is properly constituted. Thank you, Chairman.
Thank you, Jasper. Now, having confirmed that we have a quorum present, I declare the meeting properly convened and constituted. I will now again invite the Company Secretary to read the notice convening this meeting.
Thank you, Chairman. I will proceed to read the notice. The notice of the first unit holders annual general meeting. A notice is hereby given that pursuant to Regulation 134 of the Capital Markets Collective Investment Schemes Regulations 2023, the first annual general meeting of the Arvocap Unit Trust Scheme will be held virtually on Thursday, 28th May 2026 at 9 a.m. in the manner set out in the notes immediately following this notice for the following purposes. The ordinary business. First item being to note the receipt of proxies and confirm quorum for the meeting. The second item being to read the notice convening the meeting. The third being the introductions, to introduce the trustee, the fund manager, the custodian, the regulator representative, and the service providers. The fourth item is to receive and consider the fund manager's report from the Arvocap asset managers. The fifth item, Chair, is to receive and consider the custodian's report from the NCBA Bank Kenya Public Limited Company. The sixth item being to receive and consider the trustees' report from NCBA Bank Kenya Public Limited Company. The seventh is to receive, consider, and adopt the audited financial statements for the year ended 31st December 2025, and the auditor's report thereon. The eighth is to consider and ratify the appointment of BDO East Africa as the auditors for the unit trust funds for a maximum period of 4 consecutive years, and to authorize the trustee and the fund manager to fix their remuneration for the ensuing financial year. The 9th is to communicate amendments to the unit trust scheme's trust deeds and the information memorandum and the revised supplementary information memoranda for respective funds within the Arvocap Unit Trust Scheme. The 10th item, Chair, is to communicate the reconstitution of the Sharia Supervisory Board for the Sharia funds and the Arvocap Unit Trust Scheme. The 11th is to transact any other business of which due notice has been received. And the 12th is to consider questions and answers. Thank you, Chairman. Back to you.
Thank you, Secretary. The agenda is therefore duly adopted. Moving along, at this point I wish to invite the board chairman for the fund manager, Mr. David Mutonga, and the CEO, Ms. Monica Mwaneki, to give you their opening remarks. Over to you, Mr. Daktari.
Thank you, Chair. To our esteemed unit holders, the CEO, management and staff of Arvocap Asset Managers, our auditors, representative from the Capital Markets Authority, our partners, that's NCBA, Bank Kenya, PLC, Trust, that's the trustee and the custodial services. I wish to once again welcome you all to this first annual general meeting of the Arvocap Asset Managers Unit Trust Scheme. This is a historic occasion, the first time we gather formally to reflect, account, and reaffirm our shared commitment to the growth and governance of this scheme. I wish to begin my statement with the following ones, which are adapted from the governance philosophy of Lord Mervyn King. Governance is not a constraint on ambition, it is the architecture upon which lasting ambition is built. The foundation of everything we do at Arvocap Asset Managers rests on one conviction, and that is rigorous governance is not incidental. It's not incidental to value creation, it is central to it, in fact. A firm that cannot govern itself cannot reliably steward the capital of others. During the year under review, the board deepened its commitment to that conviction, strengthening our governance architecture across risk oversight, fiduciary accountability, and internal controls. Board committees were active and exercised robust oversight of portfolio risk exposure, liquidity management, operational resilience, and regulatory compliance, ensuring that at every turn that the firm operated within clearly defined and robustly enforced parameters. Arvocap Asset Managers operate in full adherence to the capital markets, legal and regulatory frameworks as prescribed by the Capital Markets Authority. Compliance is not a target we reluctantly meet. It is a standard we actively seek to exceed. In a year marked by market turbulence and heightened investor scrutiny, this commitment was both tested and affirmed. Market leadership, ladies and gentlemen, as we understand it at Arvocap Asset Managers, is not measured solely by short-term performance rankings. It is measured by the quality of our decision-making under pressure, the consistency of our communication with investors, and the credibility we maintain with regulators, counterparties, and the broader financial community. By each of these measures, the year reinforced our standing as a leading independent asset manager in this market. We understand that while strong performance may attract investors, and indeed we strive to perform well, it is integrity, discipline, and consistency that sustain institutions over the long term. This understanding continues to shape the board's strategic direction, governance priorities, and oversight philosophy as a fund manager of the Arvocap Unit Trust Scheme. What distinguishes Arvocap Asset Managers is not any single capability in isolation. It is the integration of principled governance, investment discipline, and deep market knowledge into a coherent and replicable model. We offer our investors not merely access to capital markets, but a relationship defined by transparency, accountability, and alignment of interests. Our team brings together expertise that is both analytically rigorous and contextually grounded. Ladies and gentlemen, on behalf of the Board of Directors of Arvocap Asset Managers, I sincerely thank each of our unit holders for the trust and confidence you have placed in us. We remain deeply conscious that entrusting us with your capital is both a privilege and a profound responsibility, one we do not take lightly and one that we must continuously earn. This is what drives our standards, shapes our culture, and informs the board's oversight of the firm's long-term strategic direction. Your continued confidence is the measure by which we judge our own performance, and we take it very seriously. To our regulators, we are very grateful for your stewardship of a system that rewards integrity. And to the Arvocap team, your professionalism and dedication are the living proof that institutions are indeed built by principle. Thank you for your time. God bless you. I will now hand over to the CEO to give her remarks. Over to you.
Thank you, Chairman of Arvocap Asset Managers, directors present, distinguished unit holders, the regulator representative, the trustee, custodian, auditors, esteemed partners, members of the Arvocap Asset team, ladies and gentlemen, good morning. Strong institutions are not built by reacting to markets, but by consistently applying discipline, collaboration, and long-term thinking through every market cycle. At Arvocap Asset Managers, this principle continues to shape both our investment philosophy and institutional development. From inception, our objective was not merely to participate in the markets, but to build a disciplined investment institution grounded in rigorous research, structured asset allocation, prudent risk management, and long-term thinking. Over the course of 2025, our focus extended beyond portfolio performance to strengthening the operational and institutional foundations necessary to sustain growth. We invested significantly in building internal systems, enhancing governance structures, refining investment processes, and fostering stronger collaboration across teams. This deliberate institutional approach has enabled us to scale responsibly while maintaining consistency in execution and service delivery. A key pillar of our progress has been the continued growth and development of our team. As the organization expanded, we deepened our capabilities across investment, research, operations, compliance, and technology. The diversity of experience within our team, spanning global markets, corporate finance, fixed income, equity, private wealth, family business, and offshore advisory, has strengthened our ability to navigate increasingly dynamic market conditions with discipline and perspective. Ladies and gentlemen, further, in order to bolster the compliance of our Sharia products as per the Sharia dictates, we initiated a a robust and comprehensive process of reconstituting our Sharia Supervisory Board. As at the close of 2025, our assets under management exceeded 7.9 billion, with the company serving over 17,000 clients. Approximately 18 months since the fund went live. This milestone reflects not only the confidence placed in Arvocap Asset Managers by our investors, but also the strength of the institutional framework, operational discipline, and collaborative culture we continue to build. In 2026, our priority remains the continued strengthening of Arvocap Asset Managers as a leading investment institution. We will continue enhancing our advisory and investment capabilities to support increasingly sophisticated client needs while expanding our engagement with both local and international investors. In particular, we remain focused on deepening our structured engagement with diaspora capital and strengthening Arvocap's role as a trusted bridge between global investors and African investment opportunities. On behalf of the management team and in alignment with the board's stewardship, I extend my sincere appreciation to our investors and partners for their continued trust and confidence, to our regulators for the guidance and oversight, and to our staff whose professionalism, collaboration, and commitment continue to drive our progress and uphold the standards and values upon which Arvocap Asset Managers is built. Thank you very much, and back to you, Chair.
Thank you very much, Board Chair and the CEO, for those insightful remarks. Ladies and gentlemen, we have now dealt with agenda items 1 to 3. Please note that an opportunity was provided to you to submit questions. Additionally, we have some unit holders who already posted their questions prior to this meeting, and those questions will be answered during the Q&A session. Please note that we might not be able to respond to all the questions raised due to time limitations, and therefore, all the questions received shall be collated and responses shared to your registered email, and a recording of this session will be uploaded on Arvocap's website for your reference. You may ask questions at any time during this AGM through online access by selecting the question and answer tab on the AGM display screen, or through dialing the USSD code *384*043#, or the Zoom platform embedded on the AGM digital platform. Ladies and gentlemen, I will now proceed to agenda item number 4, which is to receive, consider, and adopt the annual report and financial statements for the year ended 31st December 2025, together with the auditor's opinion. So we shall proceed to consider the financial statements. At this point, I will request the finance manager for Arvocap Asset Managers, who is Ruth Mwiti, to present to you the audited financial statements for the year ended 31st December 2025. Over to you, Ruth. Thank you.
Thank you to our investors and everybody present. Thank you for this opportunity. I will go ahead to present the financial statements for the Arvocap Unit Trust Scheme for the financial year ended 31st December 2025. So I will start with Arvocap Almasi Fixed Income Accumulation Fund, and the investment income for the year was 380,983,613. We had expenses of 56,867,012 shillings. So the net surplus attributable to the unit holders was 324,116,600 shillings. The assets that are held by Arvocap Almasi Fixed Income Accumulation Fund, the investments were totaling to 3,263,016,974. We had other assets of 200 million, and the cash and bank balances as at 31st December was 245,816,797. This brings the total assets to 3,708,878,771 shillings. The unit holders' balances for the year was 3,664,009,040, and we had payables of 44,869,731. So the total equity for the Almasi Fund was 3,708,878,771. That is the largest fund. Then we have the Dhamani Fund. The Dhamani Fund made investment of income of 78,126,739 shillings. The expenses for the fund were 15,275,301, and the net surplus that is attributable to the unit holders was 62,851,438. The total assets, this is the statement of financial position. The total assets were 7,121,716. The cash at bank was 4,508,014. So the total assets under the Dhamani Fund was 1,11,629,730. The unit holder balances, this is inclusive of the net surplus attributable to the unit holders, was 992,763,930. The trade and other payables was 18,865,800. So the total equity, and this is the funds that are owed to the unit holders, was 1,011,629,730 shillings. So that is our second largest fund. Then we have the Arvocap Money Market Fund. The investment income, this is the statement of comprehensive income. So the investment income that the Arvocap Money Market Fund realized was 27,947,989. The expenses for the fund, the total expenses were 5,258,150. And the net surplus that is attributable to the unit holders, 22,689,868. The investments, this is a statement of financial position. The investments that are held by the Arvocap Money Market Fund was totaling to 778,603,518 shillings. We had cash in the bank of 20,782,048. So the total assets that are held by the Arvocap Money Market Fund was 799,385,566. The unit holder balances was 797,057,267, and this is the investor funds plus the surplus that has been allocated to the accounts. And then we had total payables of 2,328,299. So the total equity and the liabilities was 799,385,566. I will go to the Arvocap Fixed Income Distribution Fund, and this fund From the statement of profit and loss and other comprehensive income for the period 31st December 2025, the total income that the fund realized was 15,509,867. We had expenses totaling to 4,969,591, and therefore the total net surplus that is attributable to the unit holders was 10,540,276. The Arvocap Ngao Fixed Income Distribution Fund had assets, investments worth 269 million, 211,492. We had cash of 45,632,187. So this brings the assets that are held by the Arvocap Ngao Fixed Income Fund to 314,843,679. And these funds are owed to the unit holders. This is the unit holders plus the surplus funds are 307,841,688, and there were liabilities, trade and other payables of 7,991. Sorry. So the total equity and liabilities for the Ngao Fixed Income Distribution Fund was 314,843,679. So we have 10 funds. I'm now going to the Arvocap Mabruk Sharia Equity Special Fund. So the Arvocap Mabruk Sharia Equity Fund, the statement of comprehensive income on the profit and loss, the investment income earned by the fund was 879,500 shillings, and the financial charges for this fund was 601,763, giving a net surplus that is attributable to unit holders of 277,737. The assets that are held by the fund, this is the statement of financial position, were Arvocap Mabruk Sharia Equity Special Fund had assets, totally investment, sorry. I'm not able to see the screen. Kindly help me. Kindly help me. All right. I've managed. Sorry. So we're going to the next fund, which is the Arvocap Multi-Asset Strategy Special Fund. This is a USD denominated fund. The statement of profit or loss and other comprehensive income for the period ended 31st December. So from the Multi-Asset Strategy Special Fund, the investment income totaled to 759,731. This is in USD. And then the financial service charges, these are the expenses, were 190,260. And the net surplus under the Multi-Asset Strategy Fund was 569,471. The assets and the liabilities that are under the Arvocap Multi-Asset Strategy Fund are as follows. This is the statement of financial position. We had investments of 8,607,683, and we had cash and bank balances of 1,519,883. The unit holder balances were as follows. We had 8,425,037, trade and other payables 1,702,529, and the total equity and liabilities under the Multi-Asset Strategy Special Fund was 10,127,566 USD. We'll go to Arvocap Global Equity Special Fund, and this is the investment income. Again, this is a USD denominated fund. the Global Equity Special Fund, it had investment of 194,438 USD, expenses of 52,898, and the net surplus that is attributable to the unit holders was 141,540 USD. The investments that are held by the Global Equity Special Fund, and this is the statement of financial position, are as follows. We had investments of 1,869,778 USD. Cash and bank balances, we had bank balances of 342,241. So this brings the assets that are held by the Global Equity Special Fund to 2,212,019 USD. And the unit holder balances are as follows. 2,155,088. These are the unit holder balances, including the surplus, and trade and other payables of 56,931. So the total equity and liabilities for the Global Equity Special Fund was 2,212,019 USD. I will go to the Arvocap Eurofix Fixed Income Special Fund. So this is another USD denominated fund, and the statement of profit or loss and other comprehensive income for the period 31st December 2025 is as follows. The fund made investment income of 40,483 USD. The expenses were 12,393, and the net surplus was 28,089. The investments that are held by the Eurofix Fixed Income Special Fund are as follows. This is the statement of financial position. We had investments of 619,862, bank and cash balances of 180,205, bringing the total assets to 800,067. The unit holder balances, these are the monies that are owed to the investors, are 792,573 USD, trade and other payables of 7,494 USD, and this brings the total equity and liabilities to 867 USD. I'll go to the second last fund. This is the Arvocap Sharia Global Equity Special Fund, and this is the statement of profit or loss and other comprehensive income for the period 31st December 2025. The investment income under the Sharia Global Equity Special Fund, this is a USD denominated fund. The investment income was 319, expenses of 392, and the net surplus was negative 73. The assets that are held by the Sharia Global Equity Special Fund are as follows. Investments worth 2,897 USD, cash and cash equivalent of 1,886, and total assets of 4783 USD. And the unit holder balances are 4393, 388 as trade and other payables, total equity and liabilities of 4783. So then I will present the last fund, which is the Arvocap Africa Equity Special Fund. So this is the ZAR denominated fund, and the statement of profit or loss and other comprehensive income is as follows. The investment income is 8,183,366. This is the income that the fund earned. The expenses were 3,284,527. Remember, this is ZAR. And the net surplus or rands, the net surplus attributable to unit holders was 4,913,839. The statement of financial position for the Avocap Africa Equity Special Fund is as follows. The investments were totaling to 63,011,150. Those are the investments in grants. Cash and bank balances were 17,108,790, bringing the total assets to 80,119,940. And then under the statement of financial position, the unit holder balances are as follows. So this is the investor funds. The unit holder balances were 78,892,969, and the trade and other payables were 1,226,971. So the total equity and liabilities that are under the Arvocap Africa Equity Special Fund are 80,119,940 ZAR. Thank you very much, and back to you, Mr. Chair.
Thank you very much, Ruth Mwiti, for that very comprehensive presentation of the audited financial reports. We shall now proceed to consider the auditor's report on the audited financial statements, and at this point, I will request Isaac Moriti, who represents the auditors of the funds, BDO East Africa, to read the auditor's report.
Thank you, Chair. Good morning, unit holders. My name is Isaac Moriti. On the report of financial statements, we have audited the financial statements of Arvocap Unit Trust Scheme for the 10 funds, which comprises of the statement of financial position as at 31st December 2025, the statement of profit or loss on other comprehensive income, the statement of changes in unit holder balances, and statement of cash flows for the year then ended, and the notes to the financial statements, including material accounting policies. In our opinion, the accompanying financial statements give a true and fair view of the financial position of the scheme as of 31st December 2025 and of its financial performance and its cash flow for the year then ended in accordance with International Financial Reporting Standards as issued by the International Accounting Standards Board, FRS Accounting Standards, and the requirements of Capital Markets Collective Investment Schemes Regulations 2023. The engagement lead responsible for the audit was CPA Justus Mokua with the practicing certificate number P2565. I'm Isaac Moriti representing the BDO East Africa. Thank you for your time, and back to you, Chair.
Thank you, Isaac, for that confirmation from the auditors. So we will then move on to the fund manager's report. And at this point, I would like to invite Wilson Wariari, who is the Chief Investment Officer for Arvocap Asset Managers, to present the fund performance for the year ended and an outlook of 2026. Over to you.
Thank you, Chair. Good morning, unit holders. We are living through a stretch of history where events of generational consequence have begun to feel ordinary. Conflicts that ripple across global supply chains, companies valued at $1 trillion, a wholesale restructuring of how nations trade with one another, and a technological shift that may prove to be the most consequential since the personal computer. The extraordinary has become background noise. And yet, most of the conversation around these events stays stubbornly short-term. A day's market movement gets treated as a verdict on a decade-long trade. Structural transitions that will take years to play out get flattened into a single news cycle. We operate in an environment where information is instantaneous and reaction is even faster. A kind of financial reflex culture where the dopamine hit of constant input quietly clouds out the slower, harder work of thinking long. Speed has its price. In markets, it's actually essential. It's how prices adjust, how risk gets redistributed, and how new information gets absorbed into valuations. But speed of reaction is not the same as the quality of judgment. And over time, the data is unambiguous. Staying invested has mattered far more than getting the timing right. Over the past 2 decades, every dollar placed in the S&P 500 grew more than 8-fold. Lose just the 10 best trading days over that period of time, and the return fails by more than half. Those best days, more often than not, arrived in the middle of the worst headlines. And that's why we always encouraged stay invested. The risk then is not volatility. It is distraction. Losing sight of what is actually driving long-term value, because we investors what is driving long-term value for investors, and too busy reacting to what is moving markets today. The deeper forces shaping today's headlines did not emerge overnight. The architecture of global capitalism that held for the better part of 3 decades is under visible strain. Nations are investing heavily in self-sufficiency, in energy independence, and in sovereign technology capability, in defense and in domestic defense production. At the same time, the returns from this era of growth have not been shared evenly. Wealth has accrued overwhelmingly to those who held assets, not to those who generated income through labor. AI now sits at the center of that same tension. Its gains are likely to flow, at least initially, toward the companies and capital holders best positioned to deploy it, potentially amplifying the concentration of wealth that prior technological waves already accelerated. The anxiety this produces is legitimate, and it will not be resolved by short-term investing. What builds domestic industries? What allows ordinary people to participate meaningfully in their country's growth? What converts economic expansion into lasting personal wealth? It is patient, long-term capital, and that's why we are here to allocate, and that's what or the space we are looking to allocate into. I'll now dive into the economic review of 2025, or the major things that were driving the global economy in 2025. Starting with the global economic perspective, the global economy is in monetary policy, resilient growth, and strong equity market gains led by technology and AI. Despite short-term geopolitical volatility, markets recovered quickly, rewarding disciplined long-term investors. And as we can see from the projection or from the chart on your screens, we can see the performance of the different markets in 2025. The S&P 500 had a 23% return. In China, the CSI 300 18% return. The India Nifty 50 14%. The MSI Europe was, I would say, among the basket of developed markets, the other performer at 9%, while the MSI emerging market was at 16%. So it was a great year for the global markets across. Now, coming closer home to Africa, the Africa macroeconomic environment strengthened in 2025 as global financing conditions eased and commodity markets improved. East Africa remained resilient, supported by infrastructure and investment, agriculture recovery, and expanding regional trade. Lower inflation and monetary easing across frontier markets created an attractive environment for risk environment for this. And as we can see, the GDP growth across different African markets, and it was a great year. I would say it was a great recovery year for the African markets. One, from even a currency perspective, which is, I would say, it's one of the biggest risks to most of our African markets. We saw better currency conditions in countries like Nigeria, in countries like Ghana, in Egypt, and that led to turbocharged economic performance across those markets. And so it was a great environment for, I would say, recovery efforts in the African economy. Now, coming home, so I'd like us to look at now what was the economic outlook in Kenya in 2025. Kenya economies grew by 4.6% in 2025, supported by a rebound in industry and steady growth in financial services, telecommunications, and tourism. Monetary policy eased significantly, with the central bank rate reduced by 400 basis points, or 4%, from 9%, as inflation remained contained at 4.5%, within the the CBK target range of 2.5 to 7.5%. So it was a great year from that monetary side of things. The private sector and credit growth also recovered strongly during the year. From a negative 2.9% in 2024. We had a negative 2.9% private credit growth in 2024, improved to over 12% in 2025. So it was a great period also for the a recovery period. 2025, we look at it more as a recovery period even for the Kenyan economy, and we saw that even reflecting even in our markets. We saw that reflective even on the yields and the lowering of yields, all interest rates coming lower, and so the underlying equities market remained resilient more than ever. And so looking at the performance of the equities market, speaking about the general economy, the stability that we achieved from the macro perspective, and then how that was translated into the markets and to what directly feeds into you as a unit holder. This is a performance of the NSE over the quarters, as you can see from Q1, Q2, Q3, and accelerated Q4 performance. Which resulted into the full year performance of the NSE 20 share index at 56%, while the NSE all share index was at 51%. So in numbers, we can say 2025 was one of the biggest years, and quite stood out, across the Kenyan, African, and the global economy universes. So trying to basically dig deeper into these numbers and the drivers into these, and we'll be looking at what was these anchors, or what were some of these counters or investments that anchored our portfolios and which helped us to deliver the exceptional results that we saw across our portfolios. So starting with the Kenyan equities market, one or two key themes that were quite a great driver of our performance was infrastructure and the banking strength. On the infrastructure side, looking at the Kenyan portfolio, it was anchored on two conviction peaks that delivered exceptional returns during the year. We had KPLC that had a 183% return for the year in 2025. Great investor confidence, improving cash flows in the business, better debt restructuring process. Remember, we had quite a great debt restructuring in KPLC, moving from volatile USD debt to KES debt, and a more supportive regulatory environment led to good performance on that. In terms of KCB, we also saw the same, NPLs coming lower, so better performance. We had a better relating, even from different rating agencies of our banking sector, and also good performance from the regional subsidiaries drove a 64% performance in KCB for the year. And so some of these counters were anchors, or good anchors, to our portfolios in 2025. As we keep on saying, we'll look at businesses, try to analyze them into depth, and try to position ourselves accordingly to ensure that we are making or we are creating long-term value, even as we realize gains from this. Going to the African equities fund, so this one was more driven by hard assets and cash flow durability. It was led by precious metals. This is Groshanti returned 93% and DLD gold to 79%. A sustained rally in gold prices, strong operational execution, and cost discipline at the mine level. Then the other one was on MTN. Gained 98%. Turnaround in Nigeria began bearing fruit through subscriber growth, mobile money expansion, and currency stabilization. While the Standard Bank Group, the largest banking group in Africa, offered return 34%, offering steady dividend back returns as Africa's largest bank by assets grew. Yeah, so basically also in the Africa Equities Fund, as we keep on saying, going beyond the themes that we have here locally, precious metals theme was quite a great driver of our returns in 2025, and also now expanding across the telco and basically improving. So how did we capture the growth? I spoke about better macro environment in Nigeria. So how did we capture that? It was through MTN, investing through MTN. So at times, some of these themes, we use different ways to get access to them and to capture that return for you as an investor. Now, on the global scale, 2025 was more on digital infrastructure and fintech. So those were some of the biggest drivers in 2025. Micron had a 398% return. We're speaking about AI. And for us, as you keep on saying, is how do we position within all this space itself? So one of our biggest drivers there was in the memory space. We are quite early in this investment. I think from April last year, that's when we started investing in Micron, when it was $76. Now, yesterday it closed at $925, and you can see the growth we have managed to, having held from $76 to $925, quite great return. So last year had a 398% return, resurging from high bandwidth memory, driven by a data center expansion, and propelled both revenue growth and margin recovery. Then we went beyond memory to now the infrastructure. If you read our CIO note last year, we had said we'll focus on AI infrastructure. So how did we get into that? We went into Nebius and the AI cloud infrastructure spin-out, which returned to 29% as the market recovered across its GPU as a service model and growing clientele base. We also went into fintech, and new holdings rose 76%, rewarding our thesis on about Latin America. So how did we get into this space? Global markets dynamism. So in our Latin America exposure, we went for fintech as the biggest driver for Latin America growth last year, and we went with new holdings, and which gave very great return for us. So basically, to speak about, as we keep on saying, it's for us, it's basically, even as we look at a theme, it's going beyond the headline on the theme. It's going deeper into what will actually drive return. Where is the next phase of growth in this thematic outreach? In AI currently, memory has been a great, has been great for us over that period. But going forward, looking at other, from now AI infrastructure to now even digging deeper into what is in that GPU. And that's where now we are currently positioning ourselves into. Just picking through our performance review. So what we'll look here is, I'll just pick one or two FUDs. And the basis of this is for you as a unit holder. Why do we keep on saying it's good to stay, 1, diversified, 2, invested across several cycles? And I would like to pick up FUD like the money, which had a 4.5% return in Q1, 24.87% in Q2, 8.22% in Q3, and Q4 6.96%, to give a net return of 40.23% on a net of all fees basis in 2025. Now, as you can see the performance, Q1, you see normal performance, Q2, a very decent performance, Q3 stabilized, Q4 a bit stabilized. Now, come and look at a FUD like even the multi-asset strategy FUD, which had 10.11% in Q1, 22.14% in Q2, 6.33% in Q3, and 2.68% in Q4. And then also juxtapose that against something like the global equities FUD, which had 2.62% in Q1, 16.62% in Q2, 8.2% in Q3, and 6.65% in Q4. Why is it important to be invested across all market cycles? You realize that these markets and the market dynamism in which we play in is that at different times of the year, different FUDs will be driving or based on where they're invested in. And if the macro, the outlook, the fundamentals are aligned in those markets, then different markets will be performing differently in across different cycles. And that's the beauty of you being invested and diversified across our funds. Because what it does is that it helps you that every quarter on quarter, you are capturing a certain alpha return, an above market return in one fund or the other. It doesn't mean that uniformly these funds perform the same throughout the year. There'll be those times whereby this fund is outperforming based on the underlying macro thesis. And we'll look at more even as you look at the outlook of 2026 and how that has shaped in funds like the money and in multi-asset over this year. So basically these were yield funds. The average return of 12.6 across the money market. Yields were coming lower. We started at 17%, now at about 10% as yields came lower over that. But then our fixed income distribution fund, one of our biggest, I would say, matching your goals, your cash flows to your goal. Now, 2026. what has the year had for us so far, and what's the outlook for us even as we head to the second half of the year. I would say that for the first 5 months of the year, it's been dominated by acute geopolitical supply shock, forcing global markets to rapidly reprice inflation, interest rate projections, and growth expectations. And these are some of the main themes that are played out over this period. One, we have seen geopolitical energy shock. It's been the biggest theme across the globe and has even actually impacted us as a nation so far. The escalating Middle East conflict triggered an 85% surge in Brent crude prices from below 56 barrel. So it had closed on that 1st December or in December 2025 at 56 dollars per barrel. We saw oil prices rise to above $110 dollars per barrel in March, which reversed global disinflation trends. Before that, we were in a position whereby all inflation rates across the globe were going lower and lower, but that was reversed because of these and pressuring energy importing countries, of which Kenya is one, and we have seen that being reflected in the rising inflation rate in the nation. When it came to the other impact of this was central banks halted the easing rate. Remember what we have said that last year we saw CBK lower its CBR rate by 400 basis points or 4%. This year, because of the geopolitical dynamic, they have been forced to halt that. All major central banks across the globe. We went in 2026 projecting 2 to 3 rate cuts by the Fed, even in US. We are expecting a rate cut from ECB, but now central banks have been forced to halt that because of the inflation that has resulted from the geopolitical risk above. When it came to market conditioning, we have seen equity market rotation and volatility. So we experienced significant volatility in Q1. This was indeed reflected in our multi-asset strategy fund and even in our global equities fund. We saw huge volatility, especially in the month of February, during the height, March and February, that is, at the height of this geopolitical risk, and then a V-shaped recovery, or a quick recovery in April and May this year. So what we saw was rotation from growth stock in Q1 and software as a service stocks to energy, materials, semiconductors, data center, and the power infrastructure. So it was a moment for repositioning the portfolio. And for us, why we say we are active fund managers is based on the global market or the themes, underlying themes, and the underlying fundamentals. We were keen enough and quick enough to reposition our portfolio during this period, and then also take advantage of these emerging themes and be well invested across that. And I believe as unit holders, we have seen that good recovery in the multi-asset and in the global equities fund over the last 2 months. Who are looking at the African market, Nigeria remained relatively insulated from the oil shock. So I'll just pick 2 markets in Africa. I'll look at Nigeria and South Africa. In Nigeria, remained uniquely insulated from that. The full operation capacity of the Dangote refinery shielded the domestic economy from the worst of the refined product. So it was a double, I would say a double boon for them. One, the Dangote refinery was working well. Then the $110 per barrel crude oil prices supported their FX, their FX reserves, solidified the post-reform macroeconomic recovery in Nigeria. When it came to South Africa, it was now on the other end of the barrel. So the government of national unity faced its first severe exogenous test. The spike in global oil prices transmitted rapidly, into pump, pushing inflation back toward the 4% level, and dashing the hopes of further rate cuts by the central bank. We saw large weakening over, based on these, and the local board sold off as foreign investors priced the deteriorating current account outlook. Coming back home in Kenya, we started the year with very strong FX reserves, a stable shilling and easing inflation, which had allowed the CBK to cut the rate earlier. We saw CBK cut even in February before things deteriorated. We had a 25 basis rate cut in Feb. But however, the global oil shock pushed inflation higher and forced the CBK to pause its rates or its easing cycle. So it has been a bit, two sides of the market. Nigeria heavily benefiting from what was happening. One, because of the structural reforms, but also because of the advantage of the local economy and having, being from a net energy importer to a net exporter over the same period. Well, countries like Kenya and South Africa, a bit of head or suffered from that, what was happening. Looking at 2026, or the second half, what we have for this, we're looking out in the second half of the year. The primary driver of asset returns will no longer be anticipation of rate cuts, but rather the duration of the geopolitical risk premium and the resilience of corporate earnings over this period. Looking at largely between the global and the African markets, one, we are seeing or will continue seeing the commodity-led divergence trade. So with the Strait of Hormuz remaining highly contested, we saw that even this morning. Global energy infrastructure vulnerable. We forecast Brent crude to experience moderate volatility, to close the year. Then, so who will benefit with all these? Real assets. So we are repositioning more in real assets, basic materials, energy equity, and also in the African markets, looking at the West African oil exporting countries as as one of a bifurcated way of looking at the markets this year. From a monetary policy perspective, we expect the central banks to maintain their policies at these current levels. We don't expect rate cuts as we had positioned or pivoted or expected at the beginning of the year. We're expecting a pause, and if there was to be more inflationary pressures, then we could see a rate hike probably by the end of the year. But as for now, we are in for a hold. On the equities market, it will reward tangible cash flows over speculative terminal values. And so here we recommend more of a barbell approach in terms of how to invest. One, energy infrastructure, defensive value. So looking at more as a defensive value from energy infrastructure, defense contractors, industrial metals processors, who are generating massive cash flows in the current environment. So we love cash flows. We love people who are generating cash flows and then reinvesting these cash flows or sharing these cash flows back to the investors. So we are more into cash flow, high cash flow businesses this year. The other thing is the physical tech infrastructure. The AI build out is increasingly constrained by power and physical hardware. We remain structurally bullish on semiconductors, copper mines, grid infrastructure, and the specialized cooling providers. So for the Kenyan market, for the second half of the year, we present a defensive macro environment, and so we are anticipating, the rollout cycles of requiring strategic adjustments for local allocators. We expect to be in a period of a bit of high yield environment. We are seeing leads rising a bit, so that's the environment we're expecting to operate in the second half of the year. In terms of the currency pressures, we started the year admirably well. We have admirably held, 129 to 130 range bound over that H1 period, supported by strong diaspora remittances. So we be looking more monitoring of the currency pressures. Massive surge in dollar demand in the second half of the year from oil importers could be one of the risks to that. So, so we're looking at more of an observation in terms of how that plays out. So thank you, unit holders. It's been a great start of the year. A bit volatile markets, but looking forward to a great second half of the year.
Thank you, Wilson Wariari, for that very insightful presentation and the detailed updates on the various unit trust funds. I will now request the custodian, NCBA Bank Kenya PLC, represented by Gaston Mukunu, to present the custodian's report. Over to you, Gaston.
Thank you. Thank you, Chairman. Thank you. As introduced, my name is Gaston Mukuno, and I'm representing the NCBA Bank, who is the custodian for the scheme. And to confirm to the unit holders, in accordance with the Capital Market Collective Investment Schemes Regulation of 2023, the custody agreement that is between the NCBA Kenya, who is the custodian, and Arvocap Asset Managers as the fund manager, we wish to confirm that, 1, we have discharged the duties prescribed for the custodian under Regulation 68(2) of the regulation to the Arvocap Unit Trust Scheme. 2, the issue, sale, redemption, cancellation, and calculation of the prices of the scheme's unit and the application of the scheme's income have been carried out in accordance with the regulation. And 3, the investment and the borrowing powers and restrictions applicable to the scheme in accordance with the regulations and the document of incorporation have not been exceeded. So to confirm to the members is that for the year ended 31st December 2025, we have held the assets of the scheme, including title deeds, securities, and income that accrue thereof to the order of the fund manager, the trustee, and the administrator, and facilitated the transfer, exchange, and delivery of these assets in accordance with the instructions received from the fund manager. Thank you, and back to you, Chair.
Thank you very much, Gaston, for that confirmation. I will now proceed to give the trustees' commentary, which is the trustees' report. The trustee is responsible for the oversight of the scheme and for ensuring that the fund manager manages the scheme in accordance with the trust deed, the information memorandum, the Capital Markets Act and the regulations, and all other applicable laws. The Capital Markets Act requires the trustee to cause the fund manager to prepare financial statements for each financial year that give a true and fair view of the affairs of the fund as at the end of the year and its operations. It also requires the trustee to ensure that the fund manager keeps proper accounting records that disclose with reasonable accuracy the financial position of the fund. The trustee accepts the responsibility of doing that for the financial statements, which, as have been read to you, have been prepared using the appropriate accounting policies in conformity with the International Financial Reporting Standards and the requirements of the Capital Markets Act. And in our opinion, the financial statements give a true and fair view of the state of the financial affairs of the fund and its operating results. That, ladies and gentlemen, is the trustees' report. As per the agenda, I wish to confirm that the detailed trustee report is contained within the financial statements that you have with you. We shall now proceed to the approval of the resolutions placed before the meeting. And the first resolution is to receive, consider, and if deemed fit, adopt the annual report and audited financial statements for the Arvocap Unit Trust Scheme for the financial year ended 31st December 2025. I will now request a proposer and a seconder of that motion. Ladies and gentlemen, I confirm that unit holder number 30212012 has proposed. We also have a unit holder who has seconded, and it is number 30233430 has seconded the resolution. Resolution number 2 would be to consider and ratify the appointment of BDO East Africa as the auditors of the scheme and to authorize the trustee and the fund manager to fix their remuneration. I will request for a proposer and a seconder for this second motion. I wish to confirm that unit holder number 30281804 has proposed, and unit holder number 30247301 has seconded the second resolution. So that resolutions have been duly proposed and seconded and will remain subject to the outcome of the electronic voting process. Final results shall be published in accordance with the AGM notice. Ladies and gentlemen, we shall now move to information notices, and we wish to inform you that the fund manager has formally communicated to you regarding the amendments of the Unit Trust Scheme Trust Deed, the information memorandum, and the various revised supplementary information memorandum for the respective funds within the Arvocap Unit Trust Scheme. So these amendments primarily capture the change of the fund manager physical address and also the change of auditors. Upon our approval of the amendments of the trust deed and the information memorandum and also the respective supplementary IMs and communication of the amendments to the regulator, who are the Capital Markets Authority, before sharing the fund on the fund manager's website. The second notice of information is that the fund manager has initiated reconstitution of the Sharia Supervisory Board for the Sharia funds under Arvocap Unit Trust Scheme. So having concluded on the presentations, ladies and gentlemen, we will now move on to the question and answer session, which is the last session, which will be moderated to us by the CEO for Arvocap, who is Monica Mwaneki, who will take us through that session.
So the choice of an investment fund or investment funds is guided by three major factors. Number one, your investment goals. Investments should always start with what is the goal that I am looking to achieve. The second consideration is where am I exposed to, or what other exposures do I have? For instance, there are some investors who already have bought bonds. So you would consider, telling them to invest in stocks as a way of diversification. There's an investor who probably has investments offshore, and they're looking for opportunities locally and in the African market. The third consideration would be your risk appetite and your risk capacity. This is guided by how much volatility can you take, or are you able to withstand some short-term market movements. So if, for example, you can be able to withstand some market shocks or market movements, and when we talk about volatility, by the way, we do not mean chances of losing money. We just mean that there are funds that are a bit more volatile, like stocks, than probably others like bonds. So if you can take a bit of volatility, then you are ripe, or you can be able to take some funds that have a bit of volatility in the market.
Geopolitics, and of course how that affects inflation. In the geopolitics space, we are watching for a possible deal between Israel, Iran, and US, and we are hoping that should bear something in the near term. Looking at inflation, since the war broke out, we have seen some increase in inflationary expectations, which means the prices of goods are going high, of course, because of the disruption in supply chains due to the explosion of some key passages like the Strait of Hormuz. But what this means for your portfolios, as you have seen in the month of April, we have seen quite some recovery in the markets, especially in the equity across the dollar funds, because of now much of the risk in the war or the premium in the war has been placed in, and now markets are trying to anticipate a period where this comes to an end, and that means you'll even continue to see this paced growth in your portfolios, especially in the equities and also in fixed income. Similarly, as we are continuing to see opportunities in the yield markets as yields go up a bit because of this, especially in inflation, we also will see some maybe declined as we try to take opportunities, but in the short to medium term, we are going to see also growth in those portfolios.
Diversification gets to serve two purposes: maximizing return whilst mitigating or managing risk. The most important thing as a client that you need for your portfolio is to know that I can still be able to generate a return while still being able to preserve the capital that I've already invested. So through diversification, what we get to do is we identify strong opportunities that can generate this return. So what diversification gets to do is that it allows you as an investor to know that you can be able to access much more valuable opportunities, but also in times or instances where a certain asset class or a market is not performing well, this other supporting asset class or market is still able to generate a return.
Trading decisions. Now, Kevin can focus on what he does best in tech while confidently growing his wealth in the stock market. Be like Kevin and make the smart move. Invest today.
Your money shouldn't just sit. It should move, grow, work for you. We are Arvocap Asset Managers. Trusted, regulated, people first. From everyday investors to big dreamers, we turn goals into growth. Start your investment journey today.
Meet Kevin, a techpreneur in his late 20s with big dreams and a busy schedule. Kevin is eager to invest in the Kenyan stock market, eyeing top picks like Safaricom, KCB, and equity shares. However, he constantly worries about the perfect timing to buy and sell, fearing he might miss golden opportunities. Kevin's concerns are valid and can be overwhelming, but he doesn't have to navigate this alone. We are here to simplify his investment journey. By analyzing the data and cutting through the noise, we empower Kevin to make effortless, informed trading decisions. Now, Kevin can focus on what he does best in tech while confidently growing his wealth in the stock market. Be like Kevin and make the smart move. Invest today.
Your money shouldn't just sit. It should move, grow, work for you. We are Arvocap Asset Managers. Trusted, regulated, people first. From everyday investors to big dreamers, we turn goals into growth. Start your investment journey today.
Thank you, and welcome back. We've received a number of questions. We are going to try and address a number of them. However, the others will be responded directly and also in the emails as communicated earlier. So the first question is from unit holder 302-05121, who is asking, why is Arvocap Thamani Equity Fund not performing well? We also have another question from unit holder 302-44527, who is asking, what is the company's strategy in improving diaspora client experience, considering the high costs, international calls, and complex process of making deposits? I will request our CIO to respond on the first question and our BD manager, John, to respond on the second one. CIO.
Thank you, CEO. Once again, good morning, unit holders. I'll take the first question on the money, the performance of the money, and I would like to circle us back to the presentation I was making, and as I said about the different market cycles. And as we saw, the money was the best performer in 2025, 40% return for the year. But from the presentation, you saw on a quarter-on-quarter basis, like in Q1 last year, we had a 4% return. So what this means is that market cycles or different markets have different market cycles, and what the underlying assets. Remember now, the return, let's say the returns on the money, it all depends with the movement of the underlying assets. Now, if I just speak briefly on the money, investing in the local equities fund, we started the year on a very strong footing. It was actually the best performer in Q1, about 7% return. Currently, for the year, still up about 7-8% return. Not an extremely bad return. It's a very good return, but in consideration, if you compare probably with the multi-asset or global equities that have done very well for the last 2 months, you probably be feeling like the money has lagged. But this is where the thing is. If you look at the money and how our local equities market have done, it has been more of a wait-and-see approach on these geopolitical risk. Stocks are not moving much. We have been on a range-bound. If you look at your counter, like your KCB, your equity, it's been a range-bound of volatility bandwidth of about 3% over the last 2-3 months. So not losing much, not gaining. So just a range-bound market movement, more of a wait-and-see. But what has happened over that period? We have seen the financial sector release their full year results last year, then their Q1 results this year. We have seen banks, your Coop Bank are up 24% on a profit, on a year-on-year basis. We have seen KCB, we have seen equity outperform over that period, equity, above 20% return over that period. This is yet to be priced in the market. If you look at multiple repricing, we are now trading equity or KCB or even Coop Bank cheaper, or even Safaricom cheaper than we were buying it 2, 7, 3, 4, 5 months ago, because the earnings have been better. Stock prices have not responded to the same as the geopolitics dynamics have been, moving the markets currently. But because of this multiple re-rating, means we are holding better assets, better valued this current pricing. Now, what happens if we have we've been seeing in the news that we're almost getting to the final deal of the opening of the Strait of Hormuz? Then what we expect is that now the markets will react positively. We see more flows, and you could see better performance or outperformance, especially on this fund that has not moved. Remember, global equities the global equities funds have factored in the reopening in a way. We've seen that price re-rating. The local funds, the Africa Equities Fund, have yet to factor that in. So you'll not be surprised to see your the money and your Africa Equity probably outperform in Q3, Q4, or outperform these other funds. So that's why for us, how we look at it is stay invested, but then diversified by having an equity, a global equities fund, an Africa Equities Fund, a local equities fund, means that even those moments where the local fund is not moving, or then the dynamics are positive for the global markets, you are getting your return on it. Then when things change and now the local market is the one that is probably driving returns, then you're also capturing that. So being invested across our funds or diversified across that fund, those funds, I would say, is the best positioning for you now. But our outlook remains positive, and we continue monitoring the situation in the Strait and to reposition the funds accordingly. Thank you.
Thank you. Thank you. Thank you. On the question on diaspora, I must admit that we've had challenges previously, especially because of time difference. Sometimes when a question is asked, or rather a diaspora client has an issue, because of time difference, we've taken a bit longer before. But a few strategic interventions that we have put in place to ensure that we enhance our client service, especially for our diaspora clients. Number one is that we have beefed up our client service team and our wealth team so that we have more team members. This is allowing us to help our clients even during weekends, and we are introducing shifts where our clients will be responded to, or rather we will have teams that are responding to our clients up to late in the night, so that now your questions don't have to wait until the following day. So we have quite a number of those plans in place to ensure that the teams are able to respond to you and reduce the response time. Number two, we have quite a number of channels. We have WhatsApp numbers, we have email address, we have our social media. You can utilize all of them. You don't have to call, especially when the call rates from your side are not very good. So you can utilize all the channels that you have: the WhatsApp, the email address, the social media platforms, so that your questions or rather your issues are able to be responded there. When it comes to the cost of transferring money, we've seen quite a number of clients. Sometimes you are sending money in dollars and you'd like them invested in Kenya shillings, and when you send to your bank so that the money is rerouted back to your investment account in Arvocap, you incur higher conversion rates. So what we do with our clients, we negotiate a conversion rate. So when you want to invest money in Kenya shillings and you're sending them in dollars, we give you a favorable rate, more than probably you'd get in your bank. But if you want to invest in the dollar funds, we have dollar accounts where you channel the money directly, and we are able to help you invest in any of your, the dollar funds of your choice. So you have those options so that, we can be able to help you reduce the cost of sending money and investing back home. Thank you.
Thank you, Wilson. Thank you, John. The next set of questions, this one I'll direct to our COO, Priyanka. The question is from unit holder 302844456, who is asking whether a unit holder can switch from fund to another, and if the response is to the affirmative, what is the procedure? I also have another question for the COO on withdrawing money for an emergency, as well as a question asking on our statements. Over to you.
Thank you, CEO. I would like to thank all our unit holders for attending our first AGM today. I will bunch up the first two questions together. You are allowed to switch between funds. There are two ways you can do this. The first is by logging into the app or the portal, which is accessible from our website. Go to the fund that you'd like to make the switch from and click on sell. You then put in the amount that you would like to make the transfer of. Once your sell request goes through, the units get converted into cash and sit in your cash account, which you can then withdraw via M-Pesa or bank, or invest in a fund of your choice. If the fund of your choice is in a different currency, then the app or the portal will prompt you with an exchange rate. Once you confirm that, the investment will settle. Alternatively, you can send an email to us at clients@arvocap.com, and we'd be happy to serve you through there as well. The third question was regarding statements. Statements are automatically generated by our system and sent to the registered email address at the beginning of every month. Alternatively, you can log into your Apple portal and directly download the statements from there, or you can send us an email at clients@arvocap.com whenever you'd like, and we would send the statements to your registered email address. Thank you.
Thank you. Thank you, Priyanka. There is a question here that I will request our trustee to answer. How is it safe to the investor when a trustee is the same as custodian? How is conflict of interest mitigated?
Thank you very much, the unit holder, for that question. So we'd like to say that, yes, indeed, it is true that for this fund, the custodian and the trustee is NCBA, Bank Kenya PLC. However, you will notice that the persons who handle the custodial functions are different persons and units in the bank as the persons handling the trustee. So internally, we have made that separation. Secondly, we also want to confirm that the regulations allow for that convergence. So it is something that is regulatorily allowed. It is not unique to just this fund. So we have made internally the necessary separations that are prudent to make sure that whatever decisions are made at the trustee level are transmitted well to the custodian and to the fund manager, so that that risk is mitigated. Thank you very much.
Usually asked a lot. The final question that I will take is, what is Arvocap's 10-year strategic plan? So our ambition over the next 10 years goes far beyond just growth of AUM, but also we look to redefine how wealth is built, managed and preserved across Africa by creating an institution grounded in longevity, trust, innovation, and lasting continental impact. We envision becoming the financial warehouse of choice for local and international clients by offering diversified investment solutions, world-class portfolio management, and a strong culture of governance and client stewardship. So our focus is on building a resilient institution that not only delivers sustainable returns, but also shapes the future of wealth creation for generations to come. So ultimately, we aspire to be the Africa's BlackRock, a trusted, innovative, and institutionally respected investment powerhouse, shaping the future of wealth and asset management across the continent. With that, I want to say that, as explained earlier, all questions submitted before and during this AGM, and the answers thereto will be collated and shared with all the unit holders via the email, and recording of this session will be uploaded on the company's website for your reference. Thank you, and back to you, Chair.
Thank you, CEO, for handling that question and answer session. Unit holders have received an SMS or email prompt to cast their votes. Please note that voting is still open and it closes today at 1 p.m. Kenyan time. The instructions on how to cast a vote are available for reference on the AGM notice, which is on Arvocap's website. The results of the poll shall be published on their website 72 hours after this meeting. Ladies and gentlemen, we are now at agenda item 11, which is to address any other business for which due notice has been received. I'll request the company secretary to confirm if we have received such notice.
Thank you, Chair. I confirm that we have not received any other business. Back to you.
Ladies and gentlemen, we will now conclude on the business of this AGM. Once again, please note that all queries will be collated and the responses shared via your registered email, and a recording of this session will be uploaded on the company's website for your reference. We have now reached the end of this meeting, and I would now like to invite John Gure to move a vote of thanks. Over to you, John.
Thank you, Chair. Good morning, unit holders. My great appreciation go to the unit holders for making time to attend this meeting, our board of directors, the management team, and the entire AGM organizing committee who have made this AGM successful. I also take this opportunity to acknowledge the support provided by all service providers, BDO East Africa, who are our auditors, NCBA Bank Kenya PLC, our trustees and custodians, and Custody and Registrars Group for their work towards the success of this electronic meeting. I also take this opportunity to appreciate you, our esteemed clients, for attending the first Arvocap Unit Trust Scheme's annual general meeting. Thank you, and back to you, Chair.
Thank you very much. We have now come to the end of this meeting, and we will end this meeting with the national anthem.
tuwezeshe kuishi kwa amani, tutimize na malengo yetu. Jumuiya yetu sote tuilinde, tuajibike, tuimarike. Umoja wetu ni nguzo yetu, idumu jumuiya yetu.
Ladies and gentlemen, I now declare the meeting closed. Thank you very much and good day.